To come into the Bloomberg studio on a Monday and give us their take on the markets. And for that, we go to Dryden Pence, CIO at Pence Wealth Management. Now, typically, Dryden, you're in California.
That's correct.
So, why are you here? Isn't that fun for you? Good for us.
Well, every now I come to New York about once a quarter. We have a lot of folks in this area, and so it's good to come here. So I'm really happy to be here today. Thank you for having me.
We welcomed you yesterday with rain and coldness, so you're welcome on that point. So there was a great piece in the Bloomberg that talked about how S&P 500 companies are on track to post their best quarterly earnings relative to expectations in at least 2 years because nothing disastrous happened. We didn't get that recession. And this dovetails with your note saying that this year has been much ado about nothing.
It is. I mean, people kind of dance on the head of the Fed's pen, but I mean, the point is that if you look at basic earnings, we're probably going to have record earnings across the S&P 500, and we started off with the Magnificent Seven leading the market, but now the rest of them are beginning to catch up, and I think that we're going to see this 493 continue to spread out and go, and the earnings are going to. It's basically the beat goes on every time we come. The beat goes on.
What's the pin on your lapel? The people on radio can't see it, but what's the pin on your lapel?
That's a Bronze Star.
Bronze Star, U.S. Army.
That's correct.
Thank you for your service, my friend.
Thank you for paying your taxes.
Yeah, exactly. That's what I'm good at. You don't want me in a foxhole. You want me writing a check.
You will write those checks.
That's
he
how
is
I
good
can
at
help
it.
out.
Hey, but you buy body armor, and that saves soldiers' lives. So thank you very much.
All right. Talk to us about this earnings cycle. We're just kind of getting through. We'll hear from some of the retailers here. Anything that kind of knocked you off your game one way or the other from this earnings cycle?
Well, in the earnings cycle, of course, we've got Walmart coming up at the end of the week here. But I think that what we're seeing is that consumers are continuing to spend. And that's beginning to transfer into earnings. Everybody, lowered their expectations and kind of put them down. And so we're coming in this thing. It's an easy beat cycle, and we continue to do that. But wages are at an all-time high. Earnings are at an all-time high. We've got more people working than ever before, and that drives consumers. And if you give an American consumer money, they're going to spend it. So I think that we're continuing to see that across retail. We're continuing to see that. But people break up. You have a certain amount of trade downs. When we mentioned the Walmart piece of it, is that the largest, fastest growing group of Walmart shoppers are folks that make over $100,000 a year.
Really?
And
okay.
And then they get in there. They get in there because they come for groceries. Inflation has kicked up groceries quite a bit. People feel that. They go in, and then so there really is an opportunity for continued increase in market share. And so you kind of get then you get the aspirational side because you have the very high end is doing well. I mean, gosh, 20%. I mean, 40% of consumer spending is done by the top 20% of the population. So yeah.
And Torsten Slog had a great chart out, and he kind of recycles this chart every once in a while over at Apollo, and it's basically those that have either no mortgage on their home or have a mortgage below 4%, which to that point just frees up all that cash.
Exactly. If your mortgage is at 4%, if you have a 30-year mortgage at 4%, you don't really worry too much about mortgages going to 7 or 8%. Now, if you're a millennial trying to be a first-time home buyer, your brain's going to explode. But for everybody else, it's really not as big an issue.
One of the names on your list is really interesting to me, which is Apple, because for the first time in a collective memory of a lot of investors, there's some serious and fundamental headwinds for Apple. And if you boil it down to one word, it's China. How do you guys get comfortable with that?
We get comfortable. But I think people underestimate the massive size of Apple. If you take a look at the App Store, that's an environment of 2.2 billion active users. Yeah. They've got 2.2 billion active devices that are out there. So that's 900 million people more than the entire population of China. Okay. So sometimes when you think, okay, it's a China story, now it's a global story. If you take a look at the App Store, the total merchandise value that's traded on that is over $1.1 trillion. It's bigger than the Netherlands.
Yep.
So it's amazing how big it really is.
So, I mean, I guess the issue there for Apple is, it's can they manage around China, number one, and I think there are a lot of people that are on both sides of that. And then number two, what is their AI strategy again? Do you think they're a tech company that has to have an AI strategy? Because they don't really at the moment.
I don't know. I think they have the luxury, because they're so big, they have the luxury to take a little time to make sure it's right. I mean, Apple doesn't make many mistakes, and I think that they're really, to use a military parlance, they're really about ready, aim, fire. And so I think rather than jump into just anything AI, they want to get it right. And I think that's why people trust that brand. They trust the equipment. They trust all those things. So, the fact that they're not rushing in to be the exact leader on integration of AI means that they're going to try to get it right. And I think that that's going to be important.
Well, you mentioned Walmart earlier. We talked about that. What about Amazon? Why do you own a stock like Amazon?
Amazon gets about, 40 cents out of every dollar, 4 out of 10, of everything online. And so when you think about how massively large that is, and we have a consumer that's moving more and more online, if you move from, right now we're doing like 15% of retail is online, if they move to 25, which is kind of where most of the world is going, that's a $300 billion opportunity that Amazon has. And so as behavior changes and behavior moves more and more online, you're going to see greater use of Amazon. And one thing that we have to think about is on this inflation cycle. And even if you look at inflation and people being price conscious and things like that, the most efficient way to bargain shop is online.
Oh, you're preaching to the choir. I mean, please.
And there you go. So it's just going to increase utilization of that platform. They're so dominant. And so I think that we find that long term, if we're thinking about this, that they're going to overcome whatever headwinds people are trying to imagine that they have.
One of the many reasons we like hearing from Walmart, and we will this week, is just it gives us a good read on the consumer. It feels like a broad-based read on the consumer. How do you view the consumer here? Because there's definitely some cracks out there for a lot of folks.
I think that when we talked about early on this trade down, right? If you break the consumer up into three groups, you have the top tier, the middle tier, and then the lower tier. The lower tier, inflation is showing up, and it's beginning to change some of their behavior. People having to pay more attention to pricing and things like that. They're going to move into more frequency of a Walmart or any of the discounters. But then when you take a look at that middle group, like I mentioned before, that trade down, where now because grocery prices are so high, people are going to move in there for grocery, and the next thing you know, they look at the rest of the store. And you hear it all the time. When people say, I can't find it anywhere else, so I went to Walmart. Mm-hmm. And so I think that we're going to continue to see increased traffic, and that's going to translate to increased growth and utilization.
But to the Amazon story, you're definitely buying it as a retail story, not as like a cloud play or an AI play. Is that just like pony on a cake? What is that? Icing on a cake? I don't want a pony on my cake.
You don't want a pony on your cake. That could be a problem. But I think that I think that it is. Amazon it's got the cloud, of course, and that's just going to continue to grow as we go through all this demand and AI and those things. But when we really kind of think about the consumer, because that's what are people doing, that's a very solid growth story, and it's a behavior story of the American consumer. And I think that it's one that we really need to pay attention to, because remember too that pricing online has kind of gone down over the past 10 years, whereas CPI and everywhere else has gone up. So you get better competitive pricing online, better competitive pricing in an inflationary environment, and that's just going to continue to play right into that ecosystem that is part of. I've yet to find. I very rarely find somebody who hasn't bought something on Amazon.
Yep.
Yeah. And it just continues.
Yeah, absolutely. And we'll hear from Amazon Thursday. We'll report their earnings. Walmart Thursday. Dryden Pence, thank you so much for joining us. Dryden Pence, he is the Chief Investment Officer at Pence Wealth Management, based out there in Newport Beach, California, joining us here in our Bloomberg Interactive Broker Studio. Do you think he came all the way to New York just to see us?
Obviously. Who doesn't, right?
Who doesn't?
Why, of course.
Yeah,
exactly.
okay. That's a good answer. It's a very good answer.